trade. Let's bring in Alan Nuckman once again. He's Chief Market Strategist at BullseyeOption.com. Alan, let's try this again. You have AT&T on your radar. Shares under pressure today, off about 0.8%. Why are you watching this one?
Well, this is a stock substitution setup that is a classic setup for me as my better way to trade. And I'll get into that in just a second, but I need to talk about last week. Last week was big. If you rewind the tape and look what I said last Monday, that it was crucial to see how the market reacted after testing those lows below 4,200. Now we can see it looks like we've tested and rejected. Last week was epic for the bulls like me. We had the S&P up 6%, the NASDAQ up 6%, and more importantly, we had the 10-year yield down 6%, and we've got the VIX down 30% just in the last week or so. So a lot of positives, and you talked about earnings in the previous segment. 80% of earnings have come out on the S&P, and 80% have beat their estimated numbers. So that's very much a positive.
All right. Well, before we get to the AT&T trade, let's kind of build on that sentiment because it seems largely bullish from you. You talk about last week's epic week. Of course, it was the best week of the year. Earnings it's not the only driver of this market, though, not the only catalyst. So can you make the case that the rally can continue based on the fundamentals that we have out there?
Well, I trade what I see, and what I see is, and I know Ben talked about how we are at our terminal rate, and the markets are looking for a rate cut by July of next year. So that could be a positive, obviously. The dollar not getting stronger is a positive, and earnings are expanding. If you look at what we're expecting from the next couple of quarters, you know, they're looking at very, very positive numbers. And just looking at the math, we saw Apple make more than $20 billion. Microsoft made more than $20 billion. And, you know, we had Google make more than $20 billion in pure profit for the quarter. So this pullback in tech was somewhat expected after the rally run that it had. So I think people are going to look at that pause as a opportunity to get back in because I see another leg higher in stocks. If we fill in this gap at 4,400 in the S&P, then that's the midpoint of the range we've been in for the last 6 months. That's going to be very much a positive and a catalyst for a push to the upside.
Are you as bullish on AT&T? Because it's up about 2.3% so far in November, but down about 15% in 2023. What's your trade there?
Well, I'm bullish in the fact that I've got a lot of indicators that have lined up here. It is risk reward. I trade what I see. And it's about risk reward. This stock is down here near a 30-year low. It's 30 or 40% off its 2021 top. And in the last 52 weeks, it's down 13%. So 13 is a key number for us today. Lucky 13 is down 13% in the last year versus the Dow. It used to be a Dow stock. It trades like a Dow stock, slow and steady. The Dow is up 6 or 7%. So from risk reward, I love what I see here. This is a stock that's got a PE of 6. And even though I'm an options trader, and today's an example of a very basic strategy that people need to learn, the dividend produces about 7%. Now, an options trader, you don't get the dividend, but what that tells me is people are attracted to this stock. And again, at 30-year lows, with this bottom that we've seen, we've been between 14 and 16 for a number of weeks. A breakout in this range targets 18 in the near term.
All right. Yeah, I was just taking a look. The median price target on Wall Street, which of course is longer term, is 18, but still more hold ratings than buy. So it seems like Wall Street a bit more cautious on this name.
Right, and rightfully so. I mean, this is a dinosaur stock, but again, this is a perfect setup for what I like to see. I have leverage buying, which is an indicator I use that shows money flow going into the options of that stock that have been bullish buying and accumulating here. I also see bullish divergence, whereas it made a new low but not new highs in implied volatility. That's usually a sentiment shift sign that the market's going to go back the other way. Now, people that have been short this stock at some point are going to have to take profits and move their stop losses down. Let's remember, last October, the stock moved up from 14 up to 20 very quickly.